I am now pleased to welcome to the show for an exclusive interview founder, chairman, and CEO of Gabelli Funds, Mario Gabelli. And Mario, we're so pleased to have you here on a week, which maybe is the last week we're going to be talking about the Warner Brothers Discovery Netflix deal. Now that Netflix has bowed out and it's Paramount reigning as the winner, you have holdings of all of these stocks and you're a close follower of media deals. Were you surprised to see Netflix fold and bow out as quickly as it did?
Well, it wasn't exactly quickly. On the other side, somebody always wins, somebody always backs out. And it was obvious that unless they matched the materially higher proposal and the simplification of the proposal and the timing of, and adjusted their deal for the timing of getting my cash back for my clients. So the winner was Zaslav. David conducted an auction. Stock has done extremely well. So we thank him significantly for that. And now the question is, for Netflix, their stock is also, it was down to 78. It was up to 96 the other day. And so there are a lot of individual winners here for all of those involved in this bidding war.
I was going to say, I mean, what does Netflix do now, Mario? Or what would you like to see them do now? They have a nice little $2.8 billion breakup fee. Do you think that now they don't have Warner Brothers Discovery, would you like to see them go after various IP and things of that nature?
The notion of taking their streaming and delivering it globally and looking at how much they're spending on content of $20 billion, let them bring the content and show that they're willing to keep it in the theaters for that 45-day window. The second thing I would like them to see is to learn Japanese and think about knocking on Sony's door because of the anime that Sony is doing and figuring out a way to partner on that. For example, Sony's buying, not getting into that one right now.
No, go ahead. Please do. I mean, should they buy something from Sony, just a partnership? What would you propose?
I'm not proposing anything. And, you know, this is not right now. My focus is for my clients that are taxable, make sure they're long term, to start thinking about looking at other opportunities for their Warner holdings. And right now, there's so many that will be announcing financial engineering. For example, you had Janice on earlier, and that is another example from wearing an arbitrage hat. You know what? Since you mentioned that, we wrote a book, and it's now in about 8 different languages on M&A, one of the few books written. And then we did a follow-up, and that deals with, like Elliot, what is he doing in Tokyo? If you want it, it's free. And Kate Welling and I prepared the one on merger masters. So there's a lot going on, and we expect a lot more going on. So this is a terrific time. M&A is vibrant, unlike last year. I appreciate you plugging your book, Mario. Last year, for example, someone sabotaged the deal for a company called iRobot. That stock was in the 50s. Today, it's 6 cents. The arbitrageurs are not experiencing those potholes because of the more attention of the benefits of globalization, the benefits of consolidation. And you're going to see more financial engineering, splitting off companies. Why shouldn't I do a spinoff and look at what does that mean for the shareholders? Because that's the benefit of not paying the tax. So there's a lot going on. This is a terrific time.
All right, well, tell me, Mario, I love this. This is perfect time for you to be on this show, too. Your investors get the money from Warner Brothers Discovery. You mentioned something Netflix might do. Janice Henderson, what would you say? Here's the top pick. Here is where the corporate transformation and financial engineering is going to happen, and I want to get them into that arbitrage. What is your top call?
If you want to get into Harvard College and they're in 20 years from now, all you want to do is make 8% of CAGR and have a 529. On the other side of the coin, I'd rather see them go to the University of Virginia. And,
Amen.
And so from that point of view, whenever someone wants to allow individuals to, in a free market system with all of the flaws, with the rule of law with all the flaws, what you're talking about is meritocracy, and how do we finance that? So that's important. And you saw some ideas from Dell. You saw some ideas for the 529s and for 401ks and so on. From my point of view, tomorrow you'll be an announcement for a company called Myers, located in Akron, Ohio, like 40 million shares of a $23 stock. They have, I started following it because they have an auto parts distribution business. Right now, there's 1 billion vehicles on the road. Does 300 million vehicles on the road in the United States, 4 tires per vehicle, more or less. So that's 1.2 billion opportunities to sell products. And the average age of the vehicles are getting older. So what companies help the tire being replaced? What happens when there's a lot of snow for the first time in a long time? What happens if there's ice? So these kind of razor blade type businesses are very attractive. And that would be a company that we're looking at very closely. We own it for a long period of time. There's so many like that. For example, you saw the spinoff from Comcast of Versant. That stock was drugged mercilessly by the index funds selling it. And the stock, for example, got as low as 27.8. It was a spinoff. Financial engineering gave us a great opportunity to sit there with a basket and buy it because we looked at the fundamentals, and Mark Lazarus running it is going to do a very good job of harnessing those values. So those are the things that we like, particularly where the index funds will sell it. Yeah, particularly on finished spinoffs.
And I was going to say, you are the ultimate value investor, and you have been throughout your entire career. Let's talk about where the other value might be unlocked. You were talking about the Barron's at the round table, but MSG Sports. I said one of the best. That's not what I said, Mario. You're a veteran of this industry. Look, MSG Sports. I know you like as well.
Of like Buffett, value. MSG Sports, basically, there's 24 million shares. The Dolan family owns 4+ million, but they have control of the vote. Before, you used to have a Jimmy Dolan discount, but when the Sphere has gone, which was a spinoff, has gone from like $30 to 120 or 110, they're saying that, hey, this is a creative individual. He is not going to sell the Knicks and the Rangers, but he's splitting them off as 2 separate companies, assuming they go ahead with this dynamic. And then the question is, will he sell a piece of each holding company and then do what with it? So those are the things that we like. And tonight is a big night for the Knicks because they're playing a team out of Oklahoma. And they did beat the team out of Toronto last night. So we'll see. The Rangers are not doing well, but that's okay. The values are still there.
Who's your money on, Mario?
We are owners of Madison Square Garden.
Who's your money on? Is it OKC or the... Hey, Mario, do you think that does enough to unlock the value, splitting the Rangers and the Knicks? Or would you like to see more? Do you want to see something being sold? Is this the most logical deal to get that value realization?
No, because you just saw it. The Miami Dolphins, somebody said they sold a piece of it at a valuation of X. The notion of having sports franchises, whether it's the NFL, whether it's the NBA, the NHL, or the NFL, they allow 10% of that NFL to be owned by GPL, and they structure LP interest. We have a fund that is going out and buying all of these companies in live events and basically experiences. So they, for example, going to a Formula One racetrack, for example, watching worldwide wrestling. Which are the companies involved and how do you buy them? And which ones we can buy and bundle them together so we don't have to pay the 1 in 20 or 1 in 15 that a GPLP structure does and locks it up. So that's what we're thinking about every day. And we have a conference coming up in June, our X number in terms of sports and entertainment. We do a lot of conferences like that the world is invited to.
Hey, Mario, you also are involved in a lot of different publicly traded sports stocks. I know it's something you like, again, unlocking value. What do you think is the most undervalued right now among your holdings when you look out that you maybe want to add to in the sporting world?
Well, what's going to happen, that's a great question. I appreciate that. It's, what are we going to see in the next 3 months, obviously with some challenges on a global basis, is the World Cup, soccer. We call it soccer. The world calls it football. There's a company called Man U, Manchester United. The Glazers own control of the vote. They sold a piece to an individual by the name of James Radcliffe. He owns 29%. And somewhere in the next 12 months, they're going to be able to figure out whether they want to monetize that asset for their own interest or monetize it because the world is going to be interested in quotes, in soccer. And so those are things that you think about. What other soccer teams are there? Okay, so Man U has 175 million shares. The stock is trading, I can see it now, on your screen about $17.50 or $18, and why not? This just be a punter and put some down on it.
Okay, just to wrap things up, Mario, and given what a great environment it is to, one, read all of your deals books, but two, play them in this market and do the corporate arbitrage as you do so well. Are you thinking right now about deals that might happen that could never even have been dreamed of in past administrations? How different is it this time around?
No, it's not that they weren't dreamed about in the last administration. And the free market system with all the flaws and rule of law with all the flaws, you're constantly looking at what do you want to do globally and what do you want to do domestically to get synergies or to grow your business, okay? And as a result of that, more feel that comfortable, and this is an important point, that it will close. They will hopefully go through the Hart-Scott-Rodino, the DOJ rules. And by the way, those rules are global. And so you're starting to see more of an approach saying, 1 and 1 equals 3. That's not so bad, as opposed to watching Capri drop from $40 to 19 or 20, or Sportsman's Warehouse dropping from 15 to $1.30. So the sportsmen and those that were busted deals, we start looking at, and particularly spinoffs of companies that feel that they can grow better or get a clearer multiple with regards to what's left in the company. That is a very important part of the dynamics of enterprise and M&A, and so the CEOs are very optimistic that if they want to announce something, they're going to get it done. That's a different dynamic. They always wanted to do it. Now they feel more comfortable in saying it's going to get done.
Wait, so are you saying that there were deals that have fallen by the wayside that you think will be revived? What are those?
We have several of them that we're focusing on. So we're working on that. We'll see some of the other ones that where companies bought them, like SJM Schmuckers bought a company at the wrong timing, and to figure out how that could also maybe be re-examined. In the case of Myers, they bought a company called Signature, one of the competitors of Signature, which puts down on construction sites a layer of wood or a layer of composite plastic or something like that, composite wood, that allows them to do work and construction work. A company out of Texas has gone from $5 to $15, and so the world is starting to see that. ConExpo right now is going on in Las Vegas, and individuals and companies are looking at those kind of dynamics. So that would be another example. Myers, for example, another company in Buffalo, New York, which I've liked forever, is called National Fuel and Gas. They own land in the Marcellus, and with LNG being exported, with nat gas being a source of power for the data centers in terms of electricity, they could sell a piece of their utility business. Or
it's a hot trade. Hey, Mario, I'm just going to have to jump in. I hate to do this because we're up against a hard break, but you are fantastic.